All right, folks, just as a reminder, economic calendar this week is non-farm payroll for the remainder of this particular week. Wednesday, typically, we kind of like draw the line in the sand. We don't do any more trading. So for general commentary for the midweek is just going to comprised of U.S. dollar, fiber, cable, and your price action lesson for this week is open float and layered liquidity. Okay, so here we have the dollar index. This is our daily chart. And as I mentioned, I'm primarily long-term bearish dollar unless we get above these highs in here. Okay, if this is breached, then I return to long-term bullish on dollar. But as it is, I'm looking for a potential run up into the buy-side liquidity. Again, as I mentioned, I didn't look at this as any kind of imbalance, and we're really spending a little more time putting significance on this wick because of that, as I mentioned in the previous recording. I am noting the bearish order block in here because if we do trade up to that level and show sensitivity and start to go lower, then that would be in line with my long-term bearishness on the dollar. Short term, like I said, it can run up here and run this buy side liquidity and not take these highs out and then stay sideways and then resume going lower or go higher at a later time. But right now, I'm primarily bearish dollar. Okay, I just want to repeat that. The only thing that stands in the way of that changing is the near-term geopolitical and potential war scenario with Iran. So at the time of this recording, I tried to record it earlier and I didn't have my mic on. So I had to stop midway. I realized that a couple times in the past doing this mentorship, I've done full, like several hours discussions, and unfortunately discovered that a later time there was no actual audio being captured. So thankfully I caught it this time, and also I caught a couple things in my charts that I wanted to make a few changes to. So that's why it took a little bit longer than I wanted to today. But anyway, the short term, we could see that buy side liquidity pool rated, okay, and then work inside of this breaker. So we can run the buy side liquidity, hit the breaker here because this high is higher than this one. The lowest low in there is this candle here. And also notice the body of that candle, this particular candle here. If we trade above that, we would essentially be in the body, not just the wick. And then we'll look to see if it wants to go lower. Now, it may not even go up to that buy side liquidity pool. It may just hit the bearish order block here and stay sideways and frustrate everyone still, okay, and keep everybody in a very short-term intraday day trader's profile. It's still January. As I will mention a couple things in this presentation, the reasons why I'm glad I'm not actually participating in the marketplace. I'll mention those as we go through, but I think personally the market is going to hold a range, at least unless something really major breaks out and sends the markets rippling. I think we're going to, for the most part, stay around that 2018 high and above the 96.40 until something gives way with the Iran. So I don't know what to expect. I'm not a military type of guy where I would understand what type of response should be expected. I just think that it's going to be instigated more because if you do some research on this, and I started to talk about it online and tweet about it, but I then took the tweets down. I don't want to draw any kind of particular attention to myself about opinions like that. And I'll talk freely in here, but as a public thing, I just don't want to go that far out there in public. And it may be a little bit of schizophrenia on my part, but the climate today and the way things are done, I just don't want to draw any more attention to myself than necessary. But I will say this. It is possible, it's within the realm of possibility that our agencies and operatives could instigate things along and sell the narrative that it is the other guys doing it. And I kind of like alluded to that in my tweet, and I was going to more or less build on that. And I think a lot of people are awake and they see those types of things unfolding. I mean, it goes back to 9/11, and I have my own opinions about that, and we're not going to touch that here. But that's the reason why I didn't continue with my SoundCloud, because some of the topics I wanted to talk about, I just don't feel comfortable talking about publicly. So I'll talk a little bit about it here once in a while, but I just think that you need to be paying real close attention to what's about to take place. There's a lot of things that are going to be used for this election, and it's the Wild West right now, folks. I mean, you haven't even seen the worst of it yet. There are potentially so many things that could go awry between now and November when the election takes place. I don't think it's good for Trump if we go into a war scenario with Iran, because they're just going to flip the script and say, hey, look, you said this was going to happen with Hillary, which I think we would have been in a war with Russia had she been elected. But Iran has always been on the table as far as a nation to be more or less invaded and overthrown. Do some research, and I'm not going to provide the links because I don't want any kind of track record of me doing that type of thing, but you can do some research, and there's some really amazing documentaries on YouTube, of all places, and you'll hear specific high-ranking individuals from the U.S. Basically explaining what was the goal. And all of a sudden, if you do some more research, not long after that, he changes his tune. So you can see that they tapped him on the shoulder and said, hey, shut up, basically. And he got in line with the narrative that the country wanted, okay, or the military. And I'll drop subtle hints if you don't know what I'm talking about, but I just don't want to push this idea too hard because I don't want any kind of attention to myself about it. So, and again, I'm just somebody with an opinion. Okay, I don't have any inside information about it. It's just I've watched things like this go on, and I don't trust everything that's given to us as information. Okay, and I'm not talking about just the media either. I don't trust our government. I don't trust the officials in the government, and I don't trust the people that are above our government. And there is an entity that is above our government. And if you don't believe that, just simply look at JFK. I mean, it isn't a coincidence that after that man basically made it a point that he was going to expose all that now he's no longer with us. And it was done in such a way where everyone saw it. So it was very shocking. It was very arresting. Okay, it arrested everyone's attention and concern. So I think personally, if Donald Trump is a genuine article, if he is the maverick that everyone was hoping he was going to be, and I alluded to that, I thought that it was a good idea for him to get in there because he's not a political person. He's not a politician. But I also mentioned that they're going to reject him and they're going to try to throw him out. They're going to do all kinds of things. And go back and listen to my old discussions. It's not in mentorship, but it's like other recordings. And I don't have them on my YouTube channel because I took a lot of that stuff down. There's a lot of blue collar language in it, and some of the things I wasn't real proud of myself in the way I delivered it. But the things that we're seeing, that's not the highest of the Wild Wild West. I mean, we have some real potential to see some wacky stuff go on. And unfortunately, we might be at another pivotal point in our country's existence, like 9/11. You know, everything, the whole world stopped on 9/11, and it doesn't sound, something that is widely accepted from outside the United States. Like other countries think of us as the arrogant Americans. Everything revolves around us. But that particular day, folks, it did. The only plane flying that day was Osama bin Laden's family getting out of here. Okay, so I'm not in here to have a debate or spur a debate with people in the mentorship. I'm not interested in that. I'm just saying that you need to pay attention because there's going to be a lot of things that are going to really force us into a war with Iran. I mean, not to preach, but Ezekiel 38 and 39, just read that, and you can see that even talks about the likelihood of Persia, which is Iran, and Magog and Gog, and that's Russia today. Those two entities have never been an alliance in history ever, but now they are. And we just killed, if you believe what's been given to us, and Trump has taken full credit for this and beat his chest saying that, I took him out by my order, by my instructions. These folks are going to come back at some degree way beyond what we're seeing. I think, and this is my personal opinion, that the Iranians are trying to instigate Trump to go overboard, much like he promised he would do. A measure of response that is far and above what would be reasonable. Okay, and I think they're goading him into that, so that way they can say, "See, he's a warmonger. He's a person at the helm with his buttons underneath his fingers, and he's a madman. We need to get him out of office." And that, to me, might be true. He might be an unstable individual to that capacity. We'll have to see. As I mentioned, when I tweeted the tweet initially was, we're going to see if Trump handles these types of events with a level-headed, sober, but of course he's got a lot of folks around him, and I don't trust the people around him. Okay, because if I wanted to undermine Trump, or if I wanted to lead him down the primrose lane, okay, and I was in his administration, I could say, hey, look, this guy's here and he's going to do this and he's going to do that. If my ultimate goal was to get us involved in an Iranian confrontation, which leads to an Iranian war, which leads to an invasion, which leads to us taking their oil. Because really, folks, that's what this is about. Whether you want to believe that or not, all of this theater, all this stuff that's going on is we want to get in there and put more control and more oil in our control, in our hands. And that's why we as a country continuously destabilize the Middle East. And like I said, do some research on it and you'll be shocked to see how much of this stuff is just premeditated. And it's been leading to this for such a long time. Now there's been such a mode of instigation on our part, regardless of if they attacked our embassy. Who cares? Okay, I'm not trying to diminish anything about that. I'm just saying that could be used as an argument, and I can understand that from the hardline supporting Americans that say, yeah, Trump this and Trump that. There's a lot of things I like about Trump, and there's a lot of things I don't. I don't like him as a person. I think he's too much of a cartoon, but I think he does it to just incite more drama because he's enjoying himself up there. But he's putting all the wrong things on himself in the form of bullseyes. And folks, let's just put it out there like this. If we start having dirty bombs going off in our country, you might as well forget about it. These markets will not trade normally ever again. Okay? Because you don't know what's going to happen. Even if they set a dirty bomb off just near the NYSE, the New York Stock Exchange, they will shut that thing down for who knows how long, because everyone will be afraid to go into it again. So, think about the likelihood. I'm not trying to be Chicken Little. I'm not trying to incite anxiety or fear or anything like that, but I'm just saying that this has the potential to really, really spin out of control. And there has to be some measure of mitigation on Trump's part, but not to the degree that just brings out all-out war. And it might be too far gone to even prevent that now. And also, you don't know if the retaliations that we're seeing the reports of are in fact really the Iranians shooting these missiles. And again, it sounds like I'm sensitive, or if I'm supporting the Iranians. I'm not. I'm just trying to be balanced in my perception. And what I'm talking about, again, it's my opinion. But it just feels like we're going to war with Iran. Come hell or high water, that's the ultimate goal, and we have put the person in place to put us right into it, because he's going to cowboy up. He's already got a notch on his belt, because Osama bin Laden was taken out, if you believe it, by Obama and burial at sea, which makes no sense. Now we have the highest ranking Iranian official taken out, and Trump saying it's because of him and he ordered it. Okay, so we have all these tit for tat, I'm better than you, and Trump, because he's not political. And isn't it interesting that the articles of impeachment haven't been turned over yet by Pelosi and the Democrats? There's a lot of conjecture about why this is being done. And I know this sounds like, where are we going with all this, Michael? Talk about the dollar. I'm just telling you what's on my mind right now, what I'm weighing out, what the internal dialogue is, and what I'm looking at in the news feeds, what is happening in the Middle East, and what's going on in our home front. Because there's a lot of things to balance, and it's difficult to navigate through these conditions right now. I'm not trying to, blow smoke up your tail end and say, hey, look, we can do this in every environment. Right now, it's hard, and I'm telling you the reasons why it's hard for me. So it's going to take a lot for me to be convinced that there really is a valid scenario for a longer-term swing trade. So I'm justifying my close to the vest short-term intraday model still being chose as my approach to looking at the analysis versus a longer-term swing or even a one-shot, one-kill. Getting back to Trump, we have someone that, as I mentioned years ago when we talked about this before he got elected, should he get elected, he's not going to be welcomed. He's not going to do the things that everybody wants him to do. And he basically came out and said, I'm going to put people in jail. So there's a lot of corruption in the Democratic Party. And Joe Biden basically is on record. Everybody heard him say it. He went on record, referring to the Ukrainian situation with him and his son. He didn't go so much into detail about that, but there was an investigation supposed to take place, and he said, look, get rid of him or you're not getting the aid. And he got fired or whatever and got removed from the position. And his son's collecting all this money in a field that he has no understanding of. And who knows what else is going on. And it gets back to Hillary Clinton too, her server stuff. Listen, I know there's Democrats in my listening audience, and I know there's Republicans in my listening audience. And again, I'm not here to get in a debate with you, okay, because I don't know that much about politics, and I don't know everything, okay? I'm just telling you the things that I'm thinking about. I believe that the Democrats are holding off on articles of impeachment because once they put those in the hands of the Senate, number one, he's not going to get removed from the office. Two, it opens the door for investigations because witnesses can be called, and they're going to turn over more evidence on what the Democratic Party have been doing, going back into the Obama age. So there's a lot of folks that are nervous, and they really, really, really want Trump out of office. And I think all these things are coming together in a perfect storm. And I believe one of two scenarios is going to happen. Number one, Trump's going to be met with an untimely demise, and therefore he's not going to have to worry about being reelected because dead presidents don't get reelected. Or they're going to let him get into a situation where he does something overboard with Iran, and then they go towards war crimes with that. Now, maybe that second one is a little too far-fetched, but there's a lot of things that they're just waiting for the next shoe to drop with Trump. And if you just give him enough time, he's going to do it. He talks too much, and he says too many things without any kind of reserve or filter. And now there's discussion about $80 million on his head. I watched the video where they were all talking, the speaker over the funeral procession, that if everyone in Iran gave $1, they could have $80 million they could pay to someone for Trump's head. Whether they did that or not, I don't know, okay? But that's really what this deep state wants. They want someone, and there's a lot of people in the United States that have guns, and I'm one of them, and I believe in the right to bear arms. But I'm not a nut job. I'm not going to go out there and start shooting people up. But there are a lot of folks out there that would be lulled into believing that they would be celebrity status, okay, to do something like that. Listen, they shot Reagan. They shot JFK, and they were both on camera. I just feel like someone's going to take a chance, and it might not be a citizen of the United States. It might be someone that gets in our country and just takes the shot, or it might be one of our own, and I'll let you figure out that. But there's a lot. I would not want to be Donald Trump. Let's just put it that way. Okay, I would not want to be Donald Trump. And there's just too many things that he's touched on that if he's given 4 more years and we get the House and the Senate as a Republican, because that's what I believe is the goal. And if we ask ourselves honestly, and by raising our hands, who's a Democrat, I'm not raising my hand for that. I'm a conservative. I believe in the old ways, okay, and then maybe that's not as progressive as some of you may like. But again, I'm not here to try to win you over. I'm not trying to preach to you. I'm giving you everything I promised. My internal dialogue, the things that I weigh, the things I'm thinking about, the things I'm concerned about, the things I'm admittedly fearful of because I have children. And maybe we won't introduce the draft again, but I have a lot of sons, and I don't want any of them going. And I would be a draft dodger for them. I'd take them out of here, and they can look for us. I don't care. I got means. I can get around. Okay, but my kids are not going over there dying for oil. None of them are. They're not going to get shot at because of oil, and they're not going to do anything for this country because there's nothing like it used to be. Is we have somebody in the White House, and I haven't seen a president in years that I would have felt comfortable with having any of my children enlist in the military with. But I think that if we do not choose our next steps carefully, we could really start something that we would otherwise regret. And again, it really is the ideal scenario because we could get into a full world war and an escalation in depopulation and all those things, which I believe in. I believe that they want a smaller world population because it's easier to control. And the majority of the elites think that most of us are useless eaters. And again, this is all, you can do research and find all this stuff out. It's all public knowledge. It's not contrived. It's not conjectures. It's real things. People in high offices and high seats have put this out on record. So I'm paying very close attention to this, and I'm watching Putin's response to all that. I want to see and listen to anything that he says in regards to how he views Trump's retaliation and the scope of his response to Iran, if at all. But again, I believe that Trump is selling this idea that he's the big sheriff in town, and Obama drew a line in the sand and said, don't cross this line, and they crossed it. So nothing happened. So here we have Trump now. He's not going to allow himself, obviously, to fall into that same view about him. If he says he's going to do something, he's going to have to do it. Otherwise, he looks like he's weak, and now he's got weapons at his disposal, and he's, by all accounts, using them. I just hope it doesn't go to a level that's too far. Okay, so I just put that out there because I wasn't comfortable saying it on Twitter. I would have said it, all these things otherwise. That's why I was planning on it, but I was like, it's not something I want to do there. So that's what was missing from my dialogue the other day. But anyway, getting back to the dollar index, I apologize. But like I said, short term, we could see that buy side liquidity pool. Very, very short term, we could see the bearish order block here hit and offer some short term resistance and then they roll over. I don't think that that's likely to occur. I think we're going to draw to the buy side liquidity and allow the other foreign currencies to drop a little bit more. And as you'll see when we get to them. Moving on over to the hourly chart for the dollar index, we had relative equal highs, buy side liquidity pool resting there. Standard projections beyond that, and also up to that bearish daily order block. That's what that line is here. We want to see it potentially reach up into that, and how we react there is important going forward. Again, non-farm payroll week, I don't really care. I'm going to be just watching to see what it does. I'm reminding the new folks here that are new, we don't typically expect or trust the market to provide us with low risk, high probability scenarios on the first week of the month because of non-farm payroll employment numbers from the U.S. It creates a lot of volatility, and it messes up short-term sentiment, and then the market starts to do whatever it will do next week. And that's a classic scenario in my group or the ICT group. We don't do a lot of expectation or hunts for setups Thursday and Friday of non-farm payroll week. So we have a fair value gap in here, was right before the run above here, came down, it gapped down into that when they started putting the data on for dollar, sent it higher, came back down, touched the top of the fair value gap again, expanded up, immediate rebalance with this candle here, sends it higher, fair value gap again, consequent encroachment, or just about almost consequent encroachment. I guess it looks a little bit shy of it, but nonetheless, the institutional order flow entry drill, that's the top of the gap. That would be your fill. And then we're not trading the dollar, but in the form of analysis with bullish institutional order flow. This is that imbalance from the daily chart. That's what those two levels are here, and you can see the nice reaction here we have on the 6th gap, filled the gap, ran higher, and then all the business I just explained here. And moving on into a 15-minute time frame, London, we can see the market ran short-term sell-side liquidity, rallied higher, came back, retrace into a bullish order block here in the London kill zone. Market rallies up, and then we go into New York kill zone. We have a fair value gap here, which it comes down, fills beautifully, and then rallies up, and that's going to be setting the stage for sell scenarios and sell models for GBP and Euro USD. Move on into Euro dollars. This is our daily chart, and we have a fair value gap in here. We've seen price work up into that on Monday, and Tuesday we started to see it sell off from there, and then obviously Wednesday we're going back in to the SIBI here, which is a fair value gap. I left these levels on here because I want you to monitor how much sensitivity we have looking back. And I want to draw your attention to the multiple failed attempts in here. So with buy side liquidity here, 1, 2, and now we're back below that. Sell side liquidity pool, which I don't have noted, but I want to draw your attention to it here. Relative equal lows. We have sell side liquidity pool resting there, and then we have a fair value gap in the form of a BISI, buy side imbalance, sell side inefficiency. Those are my objectives should we see a strong dollar beyond those short-term buy side liquidity pool on the dollar daily. Okay, and the one that I don't have the buy side liquidity pool label on the daily dollar index chart. I said that if it goes up above those, I would return to being bullish on the dollar long term, because right now long term I'm bearish. I kind of want to rewind myself here because it sounds kind of like doesn't make sense to especially if you're new. I can trade inside of a long-term bullish or bearish model and day trade against that. Okay, so I don't want you thinking that I'm completely oblivious to what the market's doing and I don't have any trades and I won't trade against my long-term bias. I'm just saying for a long-term bias, I'm telling you what it is because that's what you're paying for. My bias is this, and it will change when it does this or that. Okay, and that's what I explained on the dollar chart. But for the euro dollar, we have sell side here, and we have a discount PD array in the form of the fair value gap here. Those, I think, are the draw, and we could see that again if we get to that buy side liquidity pool for the dollar index on its daily chart. Should we get wildly bullish and run above those secondary buy side liquidity pool equal highs on the daily chart of the dollar, that would take us into the sell side liquidity here, and then what we would do after that, I don't know. We'd have to see what the response is if we get down here at all. Okay, but we had multiple attempts to get above, and we've shown a real heavy euro dollar as a result. Moving on into the hourly chart, this is that fair value gap, and you can see we went just above this old high here. If you look at the low on this last up close candle, that's the bearish order block, and it's also the fair value gap in here. All of the sell side delivery rebalances at the bottom of this candle here, and we basically get up into that, punch through that, take liquidity. Then we have SMT, which we'll talk about in a moment, but I'm drawing your attention to the lower highs here, okay, between the 6th and the 7th. Just look at that structure there, okay? The market comes down, comes back up inside of the fair value gap, breaks lower, creates another fair value gap, comes back up, hits that, sells off, attacks the sell side liquidity here, and now we're just about to touch what looks like the low of the fair value gap on that daily chart, which is these two levels here. Remember, those are the levels I said I was going to keep on the chart for a while, because I want you to study how price reacts and works around those levels, even in the future. Okay, moving into a 15-minute time frame. Here's that fair value gap from the daily chart, and a more refined fair value gap using the 15-minute time frame. Really nice reaction in here. London setup, fair value gap in here. I didn't want to add too many things because the chart's already too busy. But we have a SIBI, sell side imbalance, buy side inefficiency in the form of a fair value gap. Price trades up into that for London, then sells off again, comes back up into a bearish order block. There's no imbalance here because the one single candle up, that's your bearish order block, and there's no imbalance. There's no fair value gap. Okay, so it's the bearish order block that it's keyed off of with the old low, which we'll talk about in the open float layered liquidity portion of this video at the end. Everything that I teach in that lesson, I want you to go back to this old low here, and what I say about fair value gap is the same being applied with the bearish order block here. Okay, I just want to put that in because it's in my notes to say it, otherwise I would have forgotten it. But everything that is being utilized for the order block here, I'm talking about the same context used for the fair value gap in the lesson portion of this video. Okay, so again, when we get to that portion, you'll know what I mean, and it'll be much more clear. In the New York session, we have the market trading back up into the bearish order block again because there's no fair value gap. Bearish order block, trades off again, and then we're inside that fair value gap once again. Optimal trade entry, no fair value gap, bearish order block, keyed off of that level. Look at the close of that bullish candle. It's right on that level, 111.21.9. Beautiful. And then we've seen it go lower. So it's not a lot of pips, okay, but it's something to study and measure. If this chart was an hourly chart, if this chart was a daily chart, this would have been a lot more pips. The only thing we're studying is generic signatures that repeat themselves over and over and over again. And in January, like I said, you want to do a lot of this because it helps you build a closer feel for your tape reading on the market. It's, we're beginning a new year, so there's a lot of adversities in the markets right now, and we have to iron that out, and we have to basically depend on very strong analysis concepts. Whereas a fast market, a real loose market where there's a lot of volatility, it's pretty easy to find setups and find opportunity. Right now, the market's very fickle. It's jittery. It's, last night we saw the S&P fall out of bed, over 100 some handles. Okay, so that's huge. But as a form of homework, I didn't think about doing this before I did the video, but go and look at your E-mini S&P. So the stock symbol or the market symbol, whereas like we use GBP USD and the Forex price through TradingView, where you key that GBP USD in, type in ESH2020, okay, and toggle where it says futures. It may depend upon how you're getting into it. Like if I do it from my phone app, it's different where I can go right to it. But the symbol you want is ESH2020, or if you go to futures, then ES. It'll give you, if you click on it, it'll give you the option of ESH2020, and then below it'll be ESM2020. And what that is, the H is the March delivery contract for the futures contract price, and the M is delivery contract month of June. Okay, the delivery months for the ES mini are March, June, September, and December, and it repeats every year. So they're the only months that the S&P trades on the futures market. Now, some of you are probably thinking, I can't afford to trade S&P. They have a really small S&P E-mini, and it's something that all of you could potentially engage. Not right away, obviously, but you can certainly track it and follow it. So my homework for you is to go in, and I don't want folks, listen, I understand you're excited and you want me to kind of like your tweet, but we're not on Twitter to talk openly about mentorship. Okay, so when I say, what do you see? I'm not inviting all of you to come back with, okay, here's the things that I learned in mentorship, because that's not what I want, okay? As soon as I start seeing that, I'm just going to clam up on Twitter, and I'll just turn it into a circus again. I use Twitter as a means of drawing your attention to certain things, and also be as best as I can to be a inspiration to folks that can't be here with us. Because let's face it, a lot of people can't afford to be here, and I understand. But these same people are trying to make money in the markets. If they can't afford this, then they can't afford to trade, in my opinion. But that's my opinion. So, but I want you to go into the S&P E-mini ESH2020 chart and go down to a 5 and 15 minute chart. Study that for order flow and do a markup, and then I will send something to the forum tomorrow night. Okay, but you're basically looking at last night's price action. So I'm not trying to tell you to forecast the next move for tonight or tomorrow. I'm just saying mark up your charts for what you see, and then I'll give you my opinion about what you should have seen. Okay, and it's good study just to show you, even in all of the overnight drama that took place because of the missiles being launched and such, that fractal, okay, of last night into today's price action is very important, and I'll talk more about it in a post. Again, it won't be a video; it'll just be a chart with some annotations added to it, and I'll add it to the forum, and I'll tweet the link when it is posted on the forum tomorrow night. All right, so anyway, just something extra for this week, because like I said, we're not doing a whole lot of expectation this month, so I'll try to put as much as I can when I can. And if you really think about what the lesson I'm giving you at the end of this video is, it's kind of like a charter level membership lesson, okay? But I want to kind of like whet your appetites and get you thinking, because a lot of folks that go through the monthly portion, you feel like you're missing out, or you don't know what you're supposed to be doing, and you get confused about how certain things are applied and when they're not. Look, there's a lot of things that the charter members right now are thinking the same thing, okay? Maybe not to the degree of an order block or a fair value gap, but where certain things fit, when should you do this and when should you do that? They're about to do that with the trading plans portion. Once I go through the trading plans and incorporate the algorithmic thought processes behind them, that's the mentorship. Like that's the whole thing in a nutshell. Then we start using things to draw a better understanding, when to use one model over another, those types of things, where I don't want that on a YouTube video. I don't want that talked about on Twitter. I don't want that in discussions. A lot of you folks are trying to get your local neighborhood ICT members, like, trying to get folks that are in your neck of the woods, if you will. Hey, let's all collaborate and work together. I don't want you guys to think that that's welcomed here, okay? Because I don't know how many people out there are taking my stuff and, putting lipstick on it and pretending it's their own. But I'm sure there's a lot of it, and I don't want to offer up more opportunity for that type of thing. So, and again, that might not sit with you well, but that was all part of our agreement anyway. You're not supposed to be teaching. You're not supposed to be outside of our group. We're here as a community, work within the community. So looking at the British pound versus the dollar, this is our daily chart. We have a fair value gap in here in the form of a BISI, buy side imbalance, sell side inefficiency, relative equal lows. So we have sell side liquidity pool resting below that. We went basically up into midpoint of the bearish order block, which is mean threshold. Hit that. Now we have buy side liquidity pool resting above that, and sell side liquidity pool resting below here. Short term, it's below these relative equal lows, but more meaningfully, it's over here, and then we have a large pocket of sell side liquidity resting below this low, this low, this low. So you know what retail's thinking. They think that this is a safe area to put their stop. If we get that strong run on dollar, and it takes that secondary buy side liquidity pool out on its daily chart, that's where this is going for GBP. Otherwise, I don't think we're going down there. Okay, so let's move on into the hourly chart. And again, I'm drawing your attention to the higher high here, and I'll put up a chart overlay. I got a question also by a member. How am I putting the overlay on the chart with TradingView? If you go up into, like, it's somewhere like in this area here when you look at the platform, it says compare. Click on that, and then put in the symbol like you would normally if you're loading up the chart. And if you want to do it against the GBP, then you would load up Eurodollar and click the forex.com data feed. And when you do that, then you would just go back to this symbol here. It gives you the candlestick little icon here. And you click on the candlestick icon right above in this area here on the platform from TradingView. It'll give you options to trade I'm sorry, the chart as a line chart, and you click on that, then you'll have the euro dollar as an overlay as a line, and then you'll have GBP USD in the form of a line, and you just gotta maneuver it around so that way you'll see the separation, because it won't just be beautiful like my charts are at the end. Hear that shameless plug? Beautiful. It takes a lot of painstaking effort to get my charts to look as clean as they do with this platform, because I'm still new and I'm fumbling through it. But the fair value gap on the daily chart down here, I'm drawing your attention to that because I didn't do it the last time we talked about GBP. Kind of like ran through it because, again, January, it's observation, intel gathering. I'm not trying to push myself, and I don't want to get the impression that you should be out here trying to get involved in anything, because if you're going to stay with me long term, this is what we do. We sit on our hands in January. Okay, it's not fun, it's not sexy, but it is good for you. It's good medicine. All right, so inside that shaded area with fair value gap, we have two smaller fair value gaps in here, this one and this one, and that's what I showed you in the last recording. So now that you know that, it's not imperative that I keep the shaded area in here. And moving on into the SMT version, this is our correlated pair SMT. This is the cable, the blue, and the red is the euro dollar. So as I showed on the hourly chart for euro dollar, it has that lower high here where it's comparably higher on GBP. So here's our correlated pair SMT divergence, and then this one here is just this eyeball, just making sure I remember to show you the distinction between here. We have another divergence. Higher high in the GBP, lower high in euro, so which is the weaker? Euro dollar. Okay, euro dollar was weaker here, and euro dollar was weaker here, and you can see euro dollar has outperformed on the downside. Moving on into the hourly chart with the fair value gaps shown. Again, this higher high in here reaches up into a mitigation. Okay, so mitigation's here, here, and again, because it's not higher on the secondary high, it's lower, and then we have a lower low. Every time we have a down close candle, that's the bearish order block that is in the form of mitigation. So anything that was long here, they are sitting on the water, and then it can mitigate it here, and then boom, it takes off to the downside. I believe that cable should, at the time of this recording, should try to make an attempt to get below these relative equal lows, and maybe even get so far as to get into the lower fair value gap here in the form of those two BISIs. At 15-minute time frame, this is our sell side liquidity pool, as I mentioned. Really nice, obvious one in here. And we have a fair value gap on the 15-minute chart that we saw it trade up into here. Another fair value gap in here as well, fills that. Relative equal lows, and big pocket of sell side liquidity resting below in the form of that 130.50 mid figure. All right, so that brings us to our price action lesson. This is an IPTA lesson. So again, this is kind of like high order charter member type level stuff, but I want to kind of like walk you through this, and I will teach more on this for actual charter members, but this is just to get everyone's gears going, because there's a lot of things that we haven't scratched the surface of yet. Okay. All right, so looking at the fractal here for euro dollars, our 15-minute time frame, this is obviously applicable to any time frame, but I'm going to work within the intraday model because, again, it offers you a lot of practice. You can go and look at a lot of examples and study, and what I'm showing you here, you'll find them in your own study. The grade level sell-side liquidity pool resting below these relative equal lows versus this red one here. This one's untapped, okay? It's unrealized. So the market has gone lower than this relative equal lows, and once this sell-side liquidity pool has been purged, okay, I want you to focus on what is one of the biggest retail traps there is, and I want to kind of like inject a interbank perception about the same thing, so that way when you see certain things unfold in price, you know, if I'm looking at it at the same time you are, and really there's no real telling unless I tweet about it, you'll know what I'm thinking or what my thoughts would be about it, okay? So let's talk about the open float and layered liquidity. We have the old low here, and we have the old low here. Retail thought at this moment, when this low is taken out, when price trades back up to here, at this moment, if we were looking at price at that very minute, okay, retail, if we were able to poll them, okay, or go online and kind of get a sentiment reading on all the forums or all the social media posts about the euro dollar, they would be strongly supportive of looking for lower prices, and because broken support is going to be viewed as future resistance. Okay, support broken, now resistance. It's a common mantra in the retail universe, and that was something I believed when I first got involved in trading, and then I lost a lot of money, and then I no longer subscribe to that view. But at this moment here, I want you to look at this low here. The low is 111.57.2, okay, or 2 pipettes. We're going to look at this low in a moment with the actual level, but I want you to think about between this low and this low. That is old institutional order flow, okay? Now again, what do I mean by that? There's order flow in the sense that it's price delivery, and we can track what side of the marketplace is being offered, and if we have a directional bias, which clearly is the sell side liquidity pool here in this example, if that's the case and we think that the euro dollar is going to go lower, retail is going to be looking for their setup at this low here, okay, or maybe at this low here, disregarding the wick. Maybe they just use the bodies of the candles, and that's fine. Okay, I understand why they would want to do that, but I want you to think differently. Okay, I want you to look at the top of that range between this low and this low. Now, before I go any further, if this low went lower than this low, we would still use these same reference points, just in the opposite. Okay, in other words, I'm looking at this high, this low, the higher one of the two, and this low. In this area here is old institutional order flow. That means orders were paired in this area. Okay, price ran aggressively down to get the orders that rested below these lows, but also orders were offered in the form of commerce, okay, in this area. So this is old institutional order flow. 10 pips exactly above that 111.57 and 2 pipettes takes us up to a 10 pip grade layered liquidity to 111.67 and 2 pipettes. Looking at the low here on this, the lower of the two, 111.52 and 5 pipettes. 10 pips exactly above that takes us to 111.62 and 5 pipettes. Now, if we take both of those levels, okay, and overlay them on our chart, this is both of those two levels, 111.67.2, which is 10 pips above this low here. If we take a look at both those levels, 111.67.2 is 10 pips above this low here, and 10 pips above this low here takes us to 111.62 and a half. In this range, okay, this is a specific layered liquidity demarker. In this range, okay, what we're looking for is a specific IPTA PD array. So I'm going to ask you, looking at that, what resides inside this range? Pause the video for a moment here, think about what you see, and come back in a moment. All right, if you didn't pause the video and you haven't given the chance to study it before I give you the answer, you're wasting it, so pause it now because I'm about to talk about it. Inside of this range, you have a SIBI, sell-side imbalance, buy-side inefficiency. That's this right here in the form of a fair value gap. That's not the only PD array. You have a mitigation block, which is this down closed candle. This down closed candle and the fair value gap, both of them are overlapping and converging right there. Retail is expecting price to find resistance here and go lower. Maybe it's a bear flag. They're looking at that thinking, okay, this is a obvious bear flag. It's going to go lower. And the old low here would be a target of 1, and then they would do a flagpole low to high here, this range projected from this high down, and they would get some level of downside projection for that supposed, smart money continuation pattern. Again, I'm trying to teach you the higher order of price action, okay? And I don't want you to fall in trap of retail like I did many, many times. I want you to look at price like this. The interbank perspective is going up to the top of that fair value gap and mitigation. So retail was thinking at this moment here, it's going to go lower. And then the interbank jams it all the way up into an area of rebalancing, fair value gap, and mitigation. It's also inside of this range in here. So we have all of the order flow that was inside this range here. There's an opportunity to go back in there and mitigate some of those longs that they had on that they couldn't get off. Fair value, which is a deferred rebalance, And then we had the mitigation, which is flipping orders that are underwater all through here. So retail versus interbank, this is the difference. And what's actually happening in here is the open float. Open float is the orders when price was sitting at this level here. The orders above that, okay, is the buy side open float. The orders that are below this point here, like this low here and this low here, are the sell side open float. So whenever I talk about buy side and sell side, I'm specifically teaching you, without saying it, open float. That's the orders that are out there pending. The open interest that's in the marketplace in the form of positions that are active and being protected by stops, or pending orders that would instigate a new position entry. Open float is now pairing orders. So the market runs up, smart money sells at these levels because the orders that would be residing here are being paired together. So the market sees this run up. Anyone that sold short at the bear flag supposed idea and trusted the idea of selling short here or here, their stop loss would be above this swing high here. Boom. Or if they use this low here, their stop has to be just above that low. Well, they hit that too. And then, only then, the sell side liquidity is attacked here. So when we look at price, and to kind of like quote my son, he goes, Dad, I see the fair value gaps when you point them out, but I don't know when they're going to form and which ones to look at. That's where time of day, day of week, and institutional order flow overlap and converge to give you those specific levels and PD arrays. The market running up into this area here, it may not be the time of day that you feel comfortable trading, but you have to look at the economic calendar. You have to look at the daily profile, the weekly profile, the day of the week, time of day, and what the sentiment is. Okay? I'm drawing your attention back to this level here because all of this, think of this whole range if you were to divide that in half. Okay? And think that was like a key level, we'll call it that, a key specific key level. If that was a key level, by definition of anybody's view, whether it be Elliott Wave, supply and demand, classic support and resistance, whatever, everyone sees these levels on their chart, but everyone doesn't always have the same idea on what to do with it. And what I'm teaching you is to cancel out all of these supposed ideas and thought processes that permeate the retail universe and are traps. I want you to think about how this area here is the bulk of where the order flow is, because it's old order flow. But the market has to get to some level of a premium in an ideal scenario for the banks to pair their order with to go short. So before this low is taken out, when the market's trading down here like this, it could have very easily went lower. But I'm giving you an example of when price comes back to that old low. I want you to go into the marketplace and look at different pairs, different markets, different asset classes, and study this very event here. Because what I'm showing you here is a very high order way of looking at institutional order flow, tape reading, and finding setups and forecasting. So when you blend all those things together, when we commonly talk about on Twitter, and I know there's a lot of you that are new and you feel like outside the circle because we talk very aloof and just thinking about how someone that's new in this community may feel as a new trader, thinking, okay, everyone supposedly knows everything. I feel like I don't know anything, and it feels demoralizing. You feel like you want to second guess yourself. Are you cut out for this? It takes a lot of time, and I haven't taught everything. And like I said, you're here for the long haul, not just for 12 months and then 1 month of charter. This is a continued education. So I have almost 3 decades of content, okay, in my head. Okay, I'm about to turn the 30-year mark soon. It's pretty impressive what I still have to talk about. But I want you to understand some of the things that leads to a better read on the marketplace is going to fly directly against what retail thinking is going to draw into their decision making. So the majority of folks that want to trade, they're going to have ideas that just simply are more or less wrong. they're more likely to promote the opposite expectation of what they were expecting to see in the marketplace. It's many times going to be the opposite of that. And they won't understand what happens. They won't understand what took place. They'll be shocked. They'll be completely taken off guard. And when that occurs, that's a good feeling, because if you're on the opposite end of the market and it works out like this, it's fun. Now, with that said, what we're comparing is the relationship between the interbank perspective, which is looking for a short up here, versus a short down here, back at these old lows. Retail's thinking here. We're thinking here. When we see this run up aggressively, we're not excited about that, thinking it's going to go higher. That's reasonable. We expect that to take place. And look at the measure of precision using these old markers here. And you're going to tell me, who's going to argue with me? Okay, who's going to be the first guy in here, or gal, to argue and say that this is completely random, how it went up here and reacted to these levels? Look at the highs in here. Okay, look at the highs respecting that bottom of that range, which is the projection from this low, 10 pips up exactly. Obviously, when you go into higher time frames, you're going to look at a larger degree of layered liquidity demarkers. You'll use 15 and 20, 25, 30. But they go as far as 50 pips, and then it's no longer a layered liquidity concept. You're going to be looking at other things I haven't taught yet. But nonetheless, the rules about how to use these are taught in the charter member, not yet. So in case you're looking for it now, because some of you guys just became charter members and you're all excited, I'm so thankful that you send me emails and you're appreciative, but try to keep comments like that in the forum. I read them. I just don't want my inbox for my email loaded up with that kind of stuff, because it takes a long time for me to get through my emails as it is. And while I appreciate your sentiments, they're better served on the forum, because when I have time to go and look for those types of things and I want to be encouraged by all of you, I'll look and I'll read them there. But I just don't want anybody to... I've got to be very careful how to say it, because I don't want to sound insensitive. I don't feel like I'm saying it with the right amount of consideration, but just know that I appreciate it. But there's a lot of work involved in doing this, and I try to give responses to people that send me questions in email. And one of the folks that just recently joined, yes, you do send questions to me at innercircletrader@gmail.com. That's the email address that all mentorship correspondence should go through, and then you should be emailing me from the email address that's associated with your account through PayPal, and you should always include your username. And if it doesn't match username and email address, I'm not responding to you. I ignore you. And most of the time, I'll block those people, because there's a lot of people out there that have pieces of my mentorship, and they ask me questions, and I don't answer those questions if it's not someone that's actually in the mentorship. So that's the other part that takes time. When I open up an email, I have to research to see if you are one of the many that are in here, and it's just a lot of verification. So like I said, it's not an easy thing to run this mentorship. It takes a lot of time, and whatever you guys can do to help me keep that time moving along, the better it'll be for all of us. So, but look at the difference between the perception of price being a bearish idea here at this point right here, where retail will see that as support broken, now resistance. Then you see this big run up here. They're running aggressively to fill in the imbalance here, go back to mitigation, because all of this area in here that they ramped up, they have to get the remaining orders off there. And there's open float, and it's also combined with layered liquidity demarkers. And then later on, you can see that the market does in fact move lower, attacking the sell side liquidity in the form of 20 pip grade layered liquidity, reaching down, which is, this is what you're used to hearing me talk about. 5 pip, 10 pip, 15 pip, 20 pip, 25, 30 pip grade sweeps below old lows or above old highs. This idea here, okay, is something that you won't see that in anything. Okay, there's nothing like it, and it's part of IPTA. The interbank price delivery algorithm works at specific signatures in price, and it does so with a specific macro. In other words, a macro is a short list of instructions that it's supposed to do and follow and refer to. And the input that it uses is what I just showed you here, this low and this low here. And when price goes up into it, once you see this kind of stuff, if you were ever on the fence about is the market rigged, is the market controlled, believe me, this is absolutely nothing. This is nothing still. We're not even in the good stuff yet. But this is the type of thing that separates me from everyone else out there. All these folks that are pretending, coming from XYZ Bank, UBS Bank Trader, Credit Suisse, Citi, Morgan Stanley. I'm a so and so from XYZ. Everybody's a genius out there. And if you ever spend time with their analysis and look at what they're talking about, whether they want to admit it or not, it's just all retail fluff. It really is retail fluff. And when you understand how the central banks really move price around, the algorithm is doing 90% of everything I'm teaching to you. Okay, it's all automated. But once in a while, there are things that cause the marketplace to be manipulated by a manual intervention. In other words, they go in and they tinker with it, okay, and they move the market and they reprice aggressively, and that's when you know it's them. That's not the algorithm. The algorithm, when you see these big, hard, fast runs aggressively, several hundred pips, like when they did the Brexit vote or whatever, most recently with the GBP, and it just skyrocketed up, several hundred pips. That's not IPTA. Okay, that's not the algorithm doing that. That is the central bank going in manually and clearing the board. And that's the stuff that you don't get that in books. And that's the area where I'm not going to talk a lot about, because those are very specific things that if I talk about it, I can get myself in trouble. So as you can see, there's a lot of things that I can touch on, and I can get so close to so many of the things that I'm really not allowed to talk about. But it gets you in the same neighborhood. And when I say that, I know some of you are thinking, oh, but you're not teaching everything. Folks, listen, look, if you're not impressed by these types of precision, seriously, like I literally could stop and never teach anything new. Just give you trading plans with everything I already taught, and you would be destroying everything in form of competition out there. There would be no competition. There's simply nothing like this. It's not going to stop working, because it works because of the size, the volume. All these things, okay, are created to facilitate large volume trading. That's institutional trading, not mom and pop trading, not retail trading and somebody running a service like myself, okay? People that you're never going to meet, okay, in the back rooms of high level institutions. I'm talking big wig folks that you're never going to meet. You're never going to meet them. They're not going to be on social media. They're not going to be on Instagram. They're not going to write books for you. Oh, XYZ traders giving all the secrets out. It's not going to exist. That's why it takes such a long time for me to give this information out, because I have to create a language that not only protects me, but it also protects you, because some of you are going to not listen to me. And you're going to start trying to do things with this information, and you're going to break our NDA. You're going to try to do what I tell you not to do, and you're going to try to teach it, and you're going to try to do this, and you're going to try to do that. And I'm going to tell you what's going to happen. You're going to have unwelcome visitors, okay? And you're not going to like it. You're not going to like it at all. And you might laugh, and you might snicker, and you think, oh, this is far-fetched. Okay, we'll see. I'm telling you, there are people that do not want me teaching this to you. And they're listening to me. They're in here right now. And I know they are, because it's inevitable. Okay. I'm not supposed to do it. I know they're in here. So I just know how far I'm willing to go, and also what's reasonable. Okay. Because I'm not going to have to be able to sit down with someone and say, okay, you said this and you're not supposed to talk about that. I'm creating something. I'm creating a language. I'm creating a thought process that existed between what I understood as a losing trader and what I discovered why the reasons of my losing took place. And blending those things together, I filled in the gaps. And the chart is the instrument that I use to communicate to you, which was really intended to my children. That way, there's a lot of things that are like outside the chart that I'm not going to be allowed to teach you. And I've said this in the beginning. Even if you're a new student, you can go back and listen to the beginning of the mentorship and the old recordings and the live sessions where I did a lot of this kind of talking. and everybody's like, "Oh, your live trading was horrible." Anyone that looks at that and thinks that that was my trading, I'm teaching you thought process. I'm teaching you how to go in and start to build a mindset. And it was never, I'm going to go in here and kill it in front of all you. That's not what that was, and I never said I was going to do that. When I sat down with and did the live sessions was to show some of the things that will enter your mind, how to think about them, and also I was engaging 800 plus people all at one time, because that's all I had in the beginning when I first started, was like 860 some people all came in the first month. And when that took place, the live sessions I was doing, which I will never ever do this again, at least not in the capacity where I allow them to start talking to me, because it was very distracting. As I saw a question zip by, okay, if you ever go on YouTube and watch these really popular news feeds and look at their live chat, it's scrolling so fast. I don't even know why they even have them, because you can't read any of it. And just compare that experience. Go on to any like Fox News or even CNN or whatever news feed that has an open live chat on their YouTube channel, and watch how fast that's zipping by. Now imagine that you have 860 some people that you're obligated to, and they all feel entitled to get a response from all of their questions, every single one of them. And I'm also supposed to talk about the market live, and I'm also supposed to talk about the topic I had in mind when I sat down. It was nuts. It was impossible. I had no idea how I could finish that task. So I had to draw it back to what we have now. I'm comfortable with what I have now. Some people aren't comfortable. They want that live session circus again, and I'm not doing that. I am trying to resolve the YouTube. I've tried several things to get live on YouTube, and I know I'm probably doing something so simple that could be easily fixed to get me live on live streams for YouTube, because my intentions are, I want to sit down like Monday through Friday and kind of like talk about price, but I don't want to do mentorship level. But you all would be gleaning a great deal of insight, because you have the things that I'm not going to talk about, and you'll know right away when I'm talking about specific things without having to say what I'm doing. If I say the market should try to reach to this level here or reach to there, you will know, because you're being taught what they are. You'll know right away what it is, and it'll be like an interactive study for you. For the public watching, obviously it'll be a sales pitch for mentorship, because I'll be able to talk about the market before it happens. I won't be executing. It'll just be me talking about over the charts, because I got to be very, very careful not to get myself in trouble with the CFTC, Commodity Futures Trading Commission. I'm not a signal service. I'm not licensed to give trade advice, but it's my commentary about price action. So if I'm not engaging even at a demo or paper trade level openly and publicly, then there's nothing I can be held accountable for. There's no risk in that. And that's the bubble I like to stay in, because I don't need all that kind of drama. I love all you all. I love teaching. I love sharing my life with you, but I'm not opening myself up to risk to someone that's going to hear me say something and develop some opinion about, oh yeah, he's secretly telling us to buy cable and go in 20% risk. And then God forbid this person does that, and then they lose. And I never said this, okay, but then all of a sudden I get papers in the mail saying, hey, look, this person said you said that this is a buying opportunity. I'm never going to be caught in that situation. I'm never, ever, ever going to put myself in that situation. And believe me, I have people emailing me all the time that are outside our mentorship. They say they've lost thousands and thousands of dollars listening to other people, and some of them are very well-known, supposed reputable educators. They lost money following their trades, and they want me to trade their account back, or they want me to go into partnership to try to fix these other people's problems they created for them and their equity. I don't do all that stuff. I don't do it. I don't pay for people's education in college because they can't afford it. Look, I get so many requests to save the day. Okay, I'm not a savior. I'm not the superhero. Okay, I'm just somebody out there telling everybody out there that what you're doing is wrong, and the way you think about it is wrong. And the reason why I know it's wrong, because I did everything that everyone else has done. I've done all that stuff, and it's all wrong. It's all flawed. It's all backwards, and that's exactly where you're supposed to be in this industry. You're supposed to be always guessing. Once in a while, you might get something right, just like the lottery. Somebody's always somewhere winning. But not everybody's winning the lottery, and not everybody's killing it in the marketplace. Not everybody's getting it right. Not everyone knows what the market's going to do next. But there are people out there, clearly, as you've seen, that know what is likely to happen. Not every single day, but majority of the time. And the people that know when those times are and the catalysts that promote those moves, when not to listen to the marketplace and when to listen to it, that's a very, very knowledgeable person. And if you find anyone that's like that, apart from myself, because my opinion is I believe I'm that person, if you find someone else that's like that, then you should obviously lend your ear to them and take as much as you can in the form of their experience and learn from them, because they're unicorns. They don't exist anywhere else. There's a lot of people that's done a lot of amazing things in the industry. Larry Williams, took $10,000 to $2 million, lost a little bit, and ended up with $1.2 million in the Robbins contest in 1987. Never done it again. Never did it again. So while he did that, and I'm not trying to diminish that, that's someone you want to listen to. And he was my original mentor. I bought everything he had. I listened to everything he said, and I subscribed to every view he had. I know that there are problems with that. And I know that there's some of you that hold me in a high regard like that, like I'm superhuman, okay? And while it's fun for Twitter and I have fun with it, I'm not the trading god, okay? I'm not a god. I'm not anything like that. And I hate that when people say that. I know I thought of Larry Williams like that. I thought for sure the guy walks on gold plates in his home, okay? Showers in a 24-karat tub. All these ideas. I thought he had so much money, blah, blah, blah. I don't know how much he has, but I know he doesn't have what I thought he had. And I know how naive I was as a developing student of the markets back then in the 90s, and how painful it was for me to learn, because I subscribed to everything. And when he had a 1-900 number for his S&P calls, when you would listen to his analysis for the S&P and bond market, I actually traded those calls, and I lost a lot of money. And admittedly, I was doing what he said, and I was losing, and I lost a lot because I was over leveraging on top of listening to those setups. So not only was I losing money and feeling terrible, but I was losing money because not only is my hero wrong, but I over leveraged and bet heavily on his opinion. And then on top of it, I didn't have a stop loss on, so it had already moved past what he reported as a stop. And I wanted it to come back in my favor and get me back to break even. It never did. And I get stopped out because of margin. Those are things that I went through. I did all that. And after doing that for a couple weeks, I'd refund my account. And it was just became toxic. And then there for a while, I was beating Larry Williams up on America Online because of it. I would say terrible things about Larry Williams. But what I was doing was I was projecting outwardly what I was feeling inwardly. And I don't want any of you to have that type of feeling towards me, because I put way more into this than any other educator out there. I have done all these things, and I've learned painful lessons. I've lost lots of money, and I've learned how to beat this system. And it takes a lot of patience and discipline. And I don't want any of you to chase the fast buck quick lifestyle, okay, and hurt yourself with anything that I say. If you listen to me in balance and understand what I'm telling you to do and what not to do, you stand a better chance of surviving, okay? Because all of us are going to do stupid things. I've done some stupid stuff in my trading career. I've done really, really dumb things that worked out to me blowing accounts, to working out to losing more money than I had in my account, begging my family members at the time to help me, just get back above water. I had to move in with relatives. These are things that I had to go through, okay? And it's not only is it embarrassing, but it was demoralizing. So having experienced that, and in the love-hate-love relationship that I've had with my mentors because of my own deficiencies in practicing self-control, knowing exactly what I'm supposed to be doing, because I would read an article or I would read a book and I would pull something out, would cherry pick one specific thing that the author or teacher would say, And I'd go in there and make a mountain out of that one thing. And that's exactly what some of my students in this mentorship and outside the mentorship have done. They've done that with optimal trade entry. They've done that with supposed order blocks. Every down close candle is a buy. Every up candle is a bearish order block sell. I know the responsibility that's in my hands, and that's the reason why, should I get this resolved and I can go onto live streaming on YouTube, I'm not teaching mentorship, but I'm teaching intraday volatility, where we can read where the market's going to be drawn to. Because if you see this over and over and over again, you'll start seeing things click in your own personal study, and it kind of brings to life what I show in a chart, or if I show annotations in a sped up recording. When I'm talking about it live, and it's going to be very boring should I do it, but it's something I think that the trading community, number one, wants to see, because they don't see me talk about the things that I talk about with you all, calling things before it happens and such, into such detail. When we see it on an intraday basis, even in a small capacity, not everything that's offered in the mentorship, just knowing, okay, the market should turn here, it should draw to here, and study this and study that. That's kind of like the approach I want to go with it. Now, it won't meet everyone's expectation, and I'm sure I'll get blasted by trolls and people saying everything. He never takes a trade, blah, blah, blah. It's not meant for that. It would not be meant for that, okay? The goal was to help you sit down and learn to read the tape, okay? Reading the tape is reading the next few ticks and where is it drawing to. That's what tape reading is. And when you see that on 1 and 5 minute, 15-minute time frames, a large sample size of that, it's going to only improve your understanding. So anyway, that's what I have planned for 2020. I'm trying to get that resolved. I would not be doing anything in London because London is mine. I want to keep that from me. But the New York setups and such, I could send tweets that would link to the forum about what I would like to see unfold. And then you can fill in the blanks with what I say in the live sessions for tracking the price action. Again, it's not a trade signal service. It's not a trade setup service. It's not going here and trade with 3% because it's what I would probably do. Okay. I'm just saying that it's something that I'm looking into doing. And I'm not promising this as part of the mentorship. I'm just telling you it's something that I'm actively interested in for 2020. Okay. And only for the New York session. So I think I've jawboned enough for this midweek review. I want you to take what I've talked about here for open float and layered liquidity and the demarkers that I showed you here. When we see this framework, when we're expecting the market to run into a low resistance liquidity run, which is the run below this low here, if that is the setup and we have a low above this targeted low, you want to use this idea that I just taught here. Okay, and study the examples that you find in price action. You want to look at 15-minute time frames as your lowest one, because 5 and 1 minutes gets a little bit more trickier, and it's not as definitive as a 15 or a 1 hour chart. You can do a 30-minute chart. I've seen some real nice examples of over the years using that as well. But like I said, 15-minute is like my bellwether. This is the go-to chart for me for like entry setups, and if I really want to fine tune it, I drop it down to a 5-minute and 1 minute chart. You can get all kinds of setups on a 15-minute chart using a 1 hour and 4 hour bias. Okay, so whatever the market's likely to do based on your 4 hour or 1 hour, use a 15-minute time frame, use this criteria. And everything I said here, reverse it for bullish scenarios. So if this was reversed and this was like running this high here, you would take all this information on old highs instead of old lows and project it. Just everything I said here, you would flip it and apply it to what would be seen as a buying opportunity, okay, or old highs. And I think that's going to be it, folks. I want you to be careful. If you're living in the States, obviously we have things to be concerned about now. I just feel that this year, this is going to be a wild, wild year. And I would hate to feel like I never ever mentioned it, and not to take consideration to the likelihood of something happening in our country again. We weren't expecting 9/11. Nobody was expecting that. And I just think that someone, somewhere, okay, is going to try to do something this year. And I would hate to have one of our members, not that anybody should have it done to them, but I would feel terrible if something happened to any one of you. And because I think of you all as family, you're extended family to me now, and I want nothing but your success. I want you to do well at this. I want you to do well in life. The things I talk about, not only am I coaching my children, hopefully when they listen to this, but my aim is for all of you to feel that same connection. Because when I talk to you, I'm talking to you from my heart. I'm not talking to you from my brain, okay? Yes, there's a lot of things that are analytical and technical that come from my brain, but the delivery and the reasons why I'm trying to teach it to you and show it to you in the way that I'm showing is because I genuinely care about you, okay? If I didn't care about you, I would ask for monthly payments continuously, okay? But because there's a structure here, I'm giving you my time. Once you're charter, you're getting my time for free. You've paid for it all the way, and I want you to understand what my motives are, and I want you all to do well, and I want you to be safe and try not to take too many risks, not only in the marketplace but in your own personal life as well. So hopefully you found this lesson and this discussion insightful and learned something from it. Obviously, in charter level, we'll be talking more about this principle here, layered liquidity and open float, and also specific criteria that what to do and when to use it, all those types of things, they go into the algorithmic principles. But that's like later in the year 2020. So I will catch up with you by way of Twitter, I'm certain, tomorrow and Friday. And I will probably most likely not be posting the weekend edition until 9 o'clock this Saturday. Now, if I can get it done sooner, I will. But I'm not promising that. So don't hang on Friday expecting it to drop on Friday. Just anticipate it Saturday night at 9 p.m. my local time. Like I said, if I get it done sooner, I will, but give me until this weekend. All right, and I will catch up with you by way of social media. Good luck, good trading. Be careful.